Good morning, everybody. Welcome back to Schwab Coaching. It's the Tuesday edition of Trader Talk in today's market. I am your host, Kevin Horner. As usual, a beautiful morning here in Denver, Colorado. I am pleased to be joined by my friend Barb Armstrong in the chat today. Please take a moment and say hi to Barb as I work through the discussion with all of you today. And if you're not already doing so, also take a moment to follow Barb and me on X. You can do that for us individually. Barb Armstrong CS and Kevin Horner CS. Try to post for you there throughout the week with some charts that might jump off the screen at you a little bit, some levels that could be pertinent to traders in a multitude of ways, but really just want to stay engaged with all of you. And on X, that's a great way to get with us coaches outside of the segments that we host for you. So please consider following us there. And make sure you're subscribed to the Schwab YouTube coaching channel here as well. Don't forget, when subscribed, you have full access to our archives, which are going about 15 months in length now, everybody. So we've got a nice backlog of content for you there on the website. Please take advantage of it. Now, I do want to make you all aware that there is going to be a brief shift in our calendar as we go forward here on Trader Talk. We're making a minor adjustment. Previously, we've been hosting Monday through Wednesday and Fridays. Going forward, we will be hosting Monday, Wednesday through Friday. So instead of Tuesday being my solo day, it's going to be Thursday as our solo day. And we're going to actually migrate our Thursday futures class to Tuesday morning here in lieu of the Trader Talk. So what you're going to have is Monday Trader Talk, Tuesday futures, Wednesday, Thursday, Friday Trader Talk once again. So really just shifting one single class, well, I guess two as it were, Trader Talk and futures segment there from Thursdays to Tuesdays. So just be on the lookout for that minor shift in the overall calendar as we go forward here. Not likely to have a huge impact on us, but it does make things a little better from a coaching standpoint on our end of things. So that's why we're making that update. But wanted to give you all the heads up. Make sure you check schwab.com/coaching and our calendar for any specific changes you might be looking for there. Now, let's make sure that we cover our disclosure details so that we can get into the meat and potatoes of the conversation today. As always, we want to remind you that our discussions are exclusively informational and educational. Simply put, we do not make recommendations nor endorsements for any particular strategy or approach to trading the market here. Please continue to think of technical analysis complementary to your fundamental research. Remember, it's important to think of our decision-making process as multifaceted. We also want to think of it as a puzzle, and therefore places, or rather individual pieces of data can lead you to making decisions, which is fine, but we want to encourage you to make decisions based on multitude of information rather than just simply technical analysis. All right, in terms of an agenda, it's more of the same, everybody. We will start with that top-down approach, looking at the major indices. We are then going to migrate into some sector action, a couple of notable sector moves of late, and then some stocks in the news in both headlines as well as chart-specific details here. In fact, if we have the opportunity, I do want to highlight one transaction we've got working in our example portfolio. This is an example trade that I'd placed a few weeks back, and I wanted to bring that to the table for a brief discussion today as well. So plenty to get to with all of you. So we're going to jump over to the S&P 500 to evaluate how we're looking here this morning. I'll tell you, obviously yesterday was a rough start, right? We had that rough open tied to the DeepSeek news. And if I zoomed in on what we've seen from the action, it wasn't a great open, and yet everybody, how are you feeling maybe by the end of the day yesterday? I mean, we saw that we had a number of key groups in the marketplace really struggling, right? But at the same time, yesterday's low on the 20-day moving average was bought up pretty well, right? Notice that it filled this little gap from the January 16 move into January 17. If I drew a line through it, you'd see that we basically tested that ledge and have managed to move off of it. And in fact, already today trading up through yesterday's high. So if this is simply put just a a higher low along the way, well, we shouldn't be too upset about it. In fact, if I was looking at what all of this price action is suggesting, if nothing else, I think short-term traders here, everybody, will continue to say, hey, as long as we hold this level we just tested yesterday, there's upside opportunity here, right? We've got a higher low, and maybe we push back into the series of highs we made late last week. That's certainly a possibility at around 6,100. So to expose new money, maybe you do so with exit strategies that take you out under 59.60 as an example. And if you were feeling bearish, that's fine too, but you might not grow to be enthused by a potential bearish move from here unless we trade through the low we made yesterday. That would be the opportunity that some bears would be considering, because right now you're above that 20-day, you're above that 50-day moving average. So if nothing else, the rotation of money yesterday out of tech, out of semiconductors, did show a relationship to suggest that this wasn't a widespread contagion sell-off, right? You might see, simply put, just a brief pullback here in the standard trend analysis. So we'll see if this holds for the short run on the SPX. Now, I understand we've got some buffering issues happening on my end of things. Let me apologize. I'll hope to get that cleared up here. Obviously, there's very limited detail that I can do here, but I'm going to hope that it has managed to fix itself. So moving on, let's check out what's happening in the NASDAQ. The NASDAQ 100 yesterday, obviously a really rough day. Now we're going to zoom in and we're going to talk about the price action that we've seen of late. Now, if you've been on this segment with me many times in the last couple of weeks, a lot of these levels that I've got highlighted have been pertinent, right? And based on what we've seen so far today, I don't know that we can really shift our negative view and sentiment that we had from yesterday just yet. So what are we looking at? We had this falling wedge. This is generally speaking in the midst of a long-term uptrend, a bullish opportunity, and it broke to the upside in a bullish manner. But that 3 days above resistance, clearly, we know it didn't hold, and we know why it didn't hold. So now what we have to look for is something that's going to define for us whether we are yesterday just yet. So what are we looking at? We had this falling wedge. This is generally speaking in the midst of a long-term uptrend, a bullish, or do we have a continuation of that falling wedge? Right now, we look to be meeting resistance at the 20 and 50 day. That's the orange and 20, the 50-day moving average in purple, and we are below both of them. Now, it does not mean we can't push ourselves back upward through it, but we note that we're below it, and it's going to require some additional review. Now, if you are remaining bearish, cool, you might change your mind. Bearish traders may change their minds with a close over the high we made yesterday there. That high yesterday, 21,292. Let's round that up to 21,300, everybody. What do you think? Moves, or rather not moves, closes above 21,300 on the NASDAQ 100 would be potentially indicative of us being more bullish in nature. So if yesterday a trader reduced NASDAQ 100 position sizes, they would need at least one close over the high we made yesterday to kind of give encouragement to re-add any dollars taken out of those positions, right? That would make sense from a standpoint of sticking with the uptrend. We press a little bit, we can expose more money. If the uptrend is questionable and maybe no longer valid, then we want to make sure that we are tightening our purse strings and being disciplined. Now, the potential exists for us to make another lower high along the way, or rather, a lower low. This, if I took my drawing and were to just extend it out, kind of like this, could we make a lower low somewhere in here? Sure. We don't have to, but this is kind of what we're monitoring for. And many of you already know that really what we need to kind of define our next level is, do we trade through yesterday's low or do we trade through yesterday's high? And that'll be kind of the indication as to, maybe our next trend here. So a real quick look at the 5-minute bars. We can see the lines that we've drawn in on the daily chart. Is it anybody else a little uncomfortable that we are back below that main pivot point? Wow, right? That doesn't stand out fantastically for us. We are cool with it, but we want to get back up above that pivot. So until today's action can hold that pivot point, short-term bulls are maybe still on their toes a little bit, right? Being defensive because price action's giving you every reason to be defensive here in the short run. So let's see how that plays out, really for the remainder of today. That'll be instructive for us. Now, the Russell, if I migrate over to the RUT, man, did we hit that 50-day with conviction or what, everybody? Look at how the 50-day presented as that ceiling right here, right? Remember, we'd had the 50-day working really nicely for us as support. So what once was support can become resistance. Well, this has been our first test of the 50 as resistance since we broke down here. So not a surprise that the 50 is holding that zone as resistance, but it would be instructive for bulls to trade through the 50 days. So questions always abound right here, right? Does the rejection at the 50-day mean that the uptrend is no longer valued? No, I wouldn't say that. I would say that what we have is successful tests at the 200, a few of them, and having pushed off of the 200, many traders would suggest that at least a level in the longer window where you would say, you know what, trades under the 200-day moving average, that's where I would become uncomfortable. And a bullish trader of the Russell 2000, that would be a significant development. Would you all agree? Trades below the 200-day would be, because look how long it's been. Let me change this time frame. Let's go to 2 years. So we have been above the 200 all the way back to when we broke out here in December of 23. So yes, the 200-day holds a lot of importance for both trend traders and investors alike. Because remember, investors often look to deploy new money when you find long-range zones of support being tested. If the 200-day moving average is considered to maintain support as it has at least 3 and potentially, why not? We could say 4, right? Because this one was pretty close to it. We could say there's been some real consistency with the 200-day moving average. And so, look, I can understand being a little uncomfortable, but recognizing these levels should give at least traders a little bit of an understanding as to really where their decision-making opportunities reside. If you're monitoring the 20-day right beneath us, that could be a spot for that higher low. If what we're getting here at the 50-day is merely a test and rejection to set up that higher low, we like here at the 50-day is merely a test and rejection to set up that higher low. We like higher lows, of course, in the short run. They give us the chance to continue moving to create new higher highs. But in the immediate future, keeping an eye on that 20-day, maybe even the gap low in here could become pertinent for you Russell traders. So something to eyeball near term here, a couple of different levels. We could at least say that the opportunity is relatively legitimate as it relates to the Russell. The key component here obviously is going to be the discussion as it relates to interest rates. And do we get some detail out of the Fed today, perhaps, tomorrow, that tells us what they're thinking about the future, how they're feeling about things. So, in fact, let's use this as my opportunity before we move on to any additional charts. Let's talk about the Fed day real briefly. So I've got the CME Fed tool up here. I'm going to bring that into my background. At least I think I am. There it is. So here is the third-party website. Again, it's cmegroup.com, and this is not a Schwab-affiliated page, but it is the CME Group. And, it does tell us, I'll remind you, it's not a definition of what's going to happen, everybody. It is a reflection of how traders are positioned in expectation of what will happen. It does not mean it has to go that way. Traders can be surprised, it's true, but right now we're not expecting any shifts to the rate target rate here. We're at 425 to 450 basis points, 99.5% likelihood of that maintaining tomorrow. That could be now. I will say, if there were something other than a hold in policy and maybe some commentary from Fed Chair Powell that is more hawkish in nature, yeah, that could be problematic for the market. Because again, it's not the decision itself so much as maybe some of that comments, but more importantly, is the decision in line with expectations? Commonly, it's the surprise decision that will really move markets. And so based on what we see here today, expectation to be status quo, no shift. If there were a change one way or the other, that would be considered significant. What I found interesting is if we go forward to the March window here, March 19 is the next one, we still are looking at nearly 70% likelihood of status quo for the 425 to 450 basis point level. Now, what's notable about this is many of you have been watching and paying attention to the market for the last couple of years, know that in the late fall of 23, expectation was for as many as 6, maybe 7 rate cuts in 2024, which came out to 2. And now there's been some discussion that we could get, 2, 3, 4 rate cuts in 2025. And now there maybe be a belief that we might not get but just 1 rate cut in 2025. And so all of that is having some impact on the broader markets as well. This bears watching, but what is also notable is that the movement from the Fed hasn't done a whole lot to keep rates from climbing. Yes, we are off in terms of rates here over the last 2 weeks. We have sold down to an area of short-run support in terms of yield, but that's that doesn't mean that we don't have an uptrend still working here in the trends of the 10-year yield. And if the 10-year yield is going to continue to climb, it's going to do so is a headwind on the broader market, but more importantly, a headwind on Russell and small caps. So what we've seen in the last 2 weeks may have been part of the catalyst that allowed the Russell to push into that 50-day moving average. But if this were to break below the level we have set here in the last couple of days, perhaps, would we see some continuation of that? It feels like we need some additional yield decrease or yield selling, if you will. That would be consistent with, of course, buying of U.S. Treasuries to suppress yield. That would give us the lift we might be looking for here. But in the short run, this is at least going to give you something to keep an eye on. 4.5 or so is the approximate yield we need to break below so we can get a little extra push to the upside on the broader markets. Remember, falling yields here might give us a little bit of a lift. And I'm noting here that there's been a little bit more red today. What started out a little bit green and optimistic has kind of faded in this first 20 minutes. Let's move over to the worst returning group from yesterday, unfortunately. That would be the semiconductors. Semis lost 9% yesterday and are in a pretty important zone here, everybody. And I think you would all agree with me, a pretty important zone. Look where we are. We are back to lows that we have now tested a couple of different times. The absolute low goes all the way back to November 27. That low is 47.70. And then today's low to this point is 47.76. So we're pretty close. We're basically at the lows of the last 2-3 months, let's call it. Now, the concern, of course, is that we make a new lower low. And I feel like this is something we have to discuss, because inevitably, as traders, you go through a day like you got yesterday, and it's such a rough one. You're down 7%. Is it going to get worse? We're down 8%. Is it going to get worse? We're down 9%. Is it going to get worse? The feeling in the moment, everybody, is that, all right, this is never going to go up again, right? Because you're living it, right? You're feeling it, and you're dealing with these massive moves against your portfolio, and it is incredibly difficult to stay the course. Now, my hope is that we get a bounce from this level, right? Because what we have found is a very important ledge of support. Let's talk about what has played out in the last few months. Notably, we had that uptrend that was working really well, right? We had resistance that was kind of keeping us under wraps. You could have drawn that line. I think I did draw that line in this zone, kind of right in here, right? And we've been above it here and there, but the timing in which we've been above it has been extremely limited, right? I'm going to comment. Of course, I see you, Dragon Rider. I wish you could see all our notes as well. Yes, we do see you, Dragon Rider. I wish we all had some way to clean up your note situation and able to see all that we're doing from our standpoint. The posts in there, of course, but I think everybody else is seeing all you're up to. What I wanted to talk about here, guys, just the failure at a zone of resistance, right? We had resistance up here. We've been into this range, 53 to 53.25, 53.50, and we've been beaten back a few different times. And again, I can understand. Look, if you were buying back last week and trying to stay optimistic and bullish, you have every reason to try and do it, even setting in tight stops along the way, which is great. Unfortunately, those would not have benefited you yesterday. You know, there's just no way, unfortunately, to manage staying long into a weekend with a significant news development coming out and seeing stocks opening dramatically lower. Yesterday was an excellent example of what we talk about all the time with stop orders, that gap risk can't protect you on a stop order. Well, if you were investing in something like the SOX on Friday and long on Friday at the close, which again was 53.40, and then you look at yesterday's open, which was at 5,007 points, that's a pretty significant gap that would not have been protected in any way. Unfortunately, short of having put options, for example. But ultimately, what stood out to me as a trader, something that I was watching, was the uptrend held here and here all along the way, holding the uptrend, trading to the uptrend, and then breaking it. When the uptrend line gets broken, well, then rallies back, lose steam. Where else? At the uptrend line. That's where why? Well, that was support along the way. Could that be resistance? And that's more or less, that's kind of what happened here. We just didn't get into a new trend. We did not break out sufficiently as of yet. Now that we've managed yesterday's action in the selling on this news, traders on the bullish side could look at this and say, well, if nothing else, everybody, the semiconductor bull has risk reward on their side, but they've got to be disciplined, right? You got to be here on the level and know where you're going to move on if this is not going to hold. If it holds, this is a great opportunity perhaps to challenge and rally back into that confluence of moving averages right here, right? Maybe we could do that. If you're a buyer in the neighborhood of 4,800 and we could push back into 5,050, that's a 250 point potential move, everybody. That's not a small move on a position like this. We take a 250 point bounce. But what I'm suggesting is not that that's going to happen. Simply put, if your belief is that that's going to happen and you could get out at, say, 5,050, you might be looking at about 240 to 250 points of potential upside. And then downside could be just today's low. You just move on from it if we broke down, right? And if that's the case, well, then maybe you're risking 30, 40, maybe even as much as 50 points. And if you're risking 50 to make 250, that's a 1-to-5 risk to reward ratio. And you guys, you all know this. We talk about this all the time, don't we? In this segment, we talk about risk reward and the opportunity it presents, and the fact that consistency in building your risk reward opportunities can go a long way towards giving you that opportunity for profit. At least, again, we recognize we're going to be wrong a lot when we're traders. Traders are wrong frequently. The key that we want to adhere to, or the key we need as the linchpin in our decision making, is to consistently mitigate risk and take small losses such that we are allowed to stick with the winners, right? The ones that go in our favor. And that's why risk reward can be very, very helpful. So if you are constantly positioning with tight downside risk with nice upside that is better than 1 to 2 on a minimum, and for a lot of traders 1 to 3 or more, well, that's when your process can really lead towards an improved level of returns. But again, consistency very key to all of that, and the incorporation of your exit strategies also very key to all of that. Okay, let's see here. Yeah. Okay, so Carol, it's a good question. What is the narrative? I think the narrative on DeepSeek is we don't know. There's a lot of questions and a lot of concern, but a reaction that sees an entire industry group sell down by 9+%, just generically, seems uncommon, right? Now it's going to be we're going to need a little time to define whether DeepSeek is a legitimate longer range threat. There's going to be plenty of conversation around it. I think one thing to listen to between now and the rest of this next couple of weeks of earnings season is going to be paying attention to these companies in this AI space who make note of or speak to DeepSeek potentially. So we've got lots to listen to. It's our responsibility to do that, right? To do our due diligence and pay attention. But in the meantime, going to have to lean into the levels that are provided for us here. And we're going to work with those levels and just build our trades around it. That's really all that we can do as traders. You can choose to become a little bit more defensive. Maybe you use this cloud of DeepSeek as a reason for reining in your trade balances, right? Maybe you're going to say, normally I take $10,000 positions, but if I'm trading in the AI space, maybe I'm going to take smaller position sizes. Maybe I'm going to expose less dollars simply because I'm uncertain. I'm unclear. It's a question that we all have. But one thing that I have found for myself, and this is, again, an example of a process that some traders might take, is just don't focus on trying to get right what the market's narrative is, right? Or what the market is thinking. Focus on staying right in your process and sticking to a plan that gives you comfort. Because one thing I've learned is the market could not care less what I think. It couldn't care less that I've invested in ABC stock perhaps and done very well with it or done very poorly with it. None of that matters, okay? We tend as humans to assign validity to market action and market narrative. The truth is, nobody really, really has enough knowledge of that. Everything we do is trying to take all that information and use it to our best benefit, right? But my thought is very simple. Don't put the onus on you to be accurate necessarily. Just put the onus on you to manage your entry and exits properly. And you can put yourself on the right side of things simply by deciding to tighten things up when you're less comfortable and expand your willingness for risk when you are more comfortable or the market's given you reason to do so. I hope that's helpful, everybody. I know that's not a very specific thing. It actually leads you back to your plan, your playbook that you are utilizing for your decision making, right? But I think that that's a good way to go about it, simply because it reminds you that what matters is what you are doing for you specifically, and that puts everything back on us as the trader as opposed to the market, meaning we can't take our mistakes and say, well, that's the market's fault. No, the mistake that I made here was I overinvested and I didn't set an exit strategy. As an example, that happens to the best of us. So let's try and be more disciplined in our own approach, our own process. I think that's where we can get some comfort and clarity. I hope that helps out. I don't know if I answered the question in a manner that is comfortable for you, Carol, but I think we have to take that approach. Okay, let's move on through some of our, exactly. You guys are nailing this. You guys know it. You've heard me say it. Have a plan and stick with it, right? build a trade plan and then plan that trade and then trade that plan. Very simple process, but again, it puts the responsibility on us. All right, some official accountability to ourselves, I think, is one thing we can all hang our hats on. Okay, so let's look at some of the sector action. A couple of big moves that I noted yesterday. One was in healthcare. The healthcare, not just in healthcare's candle yesterday, but the level to which it has risen. We talked a little bit about how we've been slowly improving. Well, the move really in the last week has been fantastic. Now, unfortunately, we've pushed ourselves into a spot that could be acting as resistance. So those of you that may have been bullish on healthcare collectively, maybe so long ago as back. Oh, I'm already on the circle. So we'll just highlight this. All of this area where we tested the 20-day, remember, 20 was resistance, resistance, resistance until it wasn't. And now it's support. So now you've got something to work with, right? So excellent move to the upside. But if you are a bull back here, you know what? This likely represents a spot where some bulls would take a little bit of profit, just given that you've run yourself back into the 200-day moving average. Closed through it yesterday, moving our way downward through it today. Have some levels, know what you're thinking about, everybody, what matters to you, okay? So that's a nice push, but let's not get too far ahead of ourselves. Now let's look at what's happening in materials. Got a nice developing chart. However, is it notable to you all that we are right at that 50-day again? If I was to draw this in as lines, some might say it's a bit of a bull flag in here, right? And you wouldn't be all that wrong. Sure looks like it, but we are also battling it out at the 50-day. So we are back and forth right at the 50-day moving average. It's unclear whether materials are ready to pop to the upside yet again, right? Or do we break down and test the 20-day? And a reminder here as it relates to these flag formations, if you're not in the trade already, many traders would go bullish on a close above the downtrend line, bearish on a close below the uptrend line here. That's been working. But a nice development nonetheless in a space that has been absolutely beaten down. This was October 18 to these long-range lows we set in. Nice little zone of support. But according to my line here, the sell-off about 15.5% in a very tight window there, everybody. So, yeah, right, Paul. Wait for confirmation on a break. Looking for a close outside of the flag to define the next move. There's a survey opportunity, everybody. Love to hear from you in the survey. If you have an opportunity to do that, about 60 to 90 seconds, just click that link in there. It's going to open in a browser window for you, and it'll give you the chance to provide your feedback. I watched yesterday's show with Ben and Mike Bruskoff. Really nice and informative. A great discussion between those two. But as always, I want to hear from you as well. Value your input. So if you do have some ideas, please let me know. Share those in the survey. The other space I wanted to look at today was discretionary. We're going to look at that real quickly before getting to some stocks, individuals. Guys, what do we like about this one? We had that channel. Channel pulled us back to where? Horizontal support and the 50-day moving average. Wow. Couple of things lining up in here, huh? Then we got outside of the channel, and we've gone sideways, really, with yesterday's low, the open, right on the 20-day, right? So this looks a little bit notable. Could traders potentially position themselves today with new funds here in order to participate in a potential continuation move of this uptrend? Sure, they could, right? Now the question is, where? Well, some of you might look at that low from yesterday, but if you're looking at the low from yesterday at 1857 and the 50-day moving average is only 17 points beneath it, what about the 50-day, right? Why not go maybe to the 50-day moving average? Or maybe this set of two back-to-back tails right on that same level validates that zone as a little more supportive. Maybe a trader thinks about this from a couple of different levels, right? Remember, you don't have to use only one exit strategy. Excuse me. Let's try that again. You could utilize multiple layers for your exits. Here's another gap ledge right here. So yesterday, open week, finished strong. Now, if you're a believer, you could comfortably put together some new work here, right? Some new investment dollars, and you might stay with it as long as we hold the 50-day moving average on a closing basis. As an example, that might work out. Alternatively, don't forget, you might trade through these highs, and that might be a level that some traders would say, all right, well, now we've got new short-term highs. Let's add to a trade that's already working in our favor. That could work out well, potentially also. So as usual, know how you want to approach things, right? Some of you would get started right away, maybe based on yesterday's low. Some of you might say, yeah, I'm waiting for a trade and a close over 1913. That's going to give me the confidence to add here. They might look at that. Okay, so some interesting levels achieved here recently with these three particular sectors. The last one we're going to just quickly look at is tech, which is bouncing a bit today. So tech once more, we'd been in that uptrend, right? A lot of these stair steps along the way. And now we seem to potentially have found short-term support. Now, if today's candle holds, everybody, I have to think some of you are going to like what you see out of that, right? I mean, if that is the close today, my goodness, what a wonderful hammer. The only thing we could feel better about is if the top of that hammer was above the high from yesterday. That would be even better, of course. But tech might have found that foothold. It's way too early to know, but I think that stands out, and we gotta look at that. Okay, so that's an improvement, but we have not seen. So we saw tech down here at this ledge recently, back in the middle of the month, and have been thrown back pretty aggressively. But if nothing else, like I often say, everyone, even if we don't know what's coming next, we do have the potential for, as BJ's pointing out, that could hold. And if that low is good, maybe the aggressive traders would just say, I'm willing to take a stab here. I'll put a little bit of money to work with a stop below maybe today's low, maybe yesterday's, and only move on if it broke down further. You know, sometimes, everybody, you just got to take your chances. Again, how you choose to take your chances in terms of amount of money deployed to the trade, that's the key component, I think, for many of us. So again, feeling less comfortable, let's tighten the purse strings. Feeling more comfortable, let's expand a little bit, but let's always consider our downside risk and our targets so that we know how to move on if things don't go our way. So some improvement there, even in tech. How about some individuals? Got to look at the nuclear space. Got absolutely decimated yesterday. So we're going to look at a couple of these real briefly. Here's Constellation, got hammered up there at 352, got thrown back today to a new low today, goodness, at 262, which means we are at the lows today, 90 points off the high. That's not great. That's still showing some struggles, as you can see. We have that low, but we've rallied into the 20-day moving average on the high side today, but that is not acting fantastically. We could also look at Oklo, showing a similar throwback right now, getting a little bit of this price action. One thing to remember, big moves mean often moves intraday both directions. That's what these tails are looking like, right? Look at yesterday. High up here at 35, low down here at 28. Big swings, really big swings. And that tells us that they're still in price discovery mode here. Now, sometimes you can be rewarded for being early, right? But at the same time, you can also be smacked down. You can be reminded very quickly that that maybe you need to be a bit more disciplined. So as usual, position size could determine the level of your, or maybe what I should say is the level of your comfort should help to determine position size. All right, let's look at Next Gen Energy. Not a great candle there. Got a multiple rejection at the same ledge up here, everybody. That stands out. So let's make note of that. And then the other one that I thought we could peek on is CCJ, Kamiko. And they also got thrown back pretty aggressively. So you can see many of you are pointing out the sector, the space relative to nuclear energy and the energy necessary to manage all of these. This AI is necessary, but maybe we got a little bit ahead of ourselves in the price action. Okay, how about a quick look at some other stocks in the news? Oh wait, you know what we're gonna do is I think I saw a couple of upgrades I wanted to point out. So we had oddly, we had a Cisco upgrade, CSCO. So BNP Paribas upgraded Cisco to outperform from neutral. Put a target on this one, everybody, at $72 a share, which, current relevant to current price is a 20% premium. So, hey, if we could get there, that's wonderful. Now, reminder, no price target is a guarantee to be achieved. But what about that 50-day moving average, everybody? I mean, I don't like today's candle any more than most of you would, and yesterday's candle was terrible. However, we still see many higher lows, starting with this, and you got another higher low, another higher low, another higher low, another, and then today and yesterday. So maybe we're looking at just a continuation move, everybody. If nothing else, bulls in Cisco could surely set their risk against the lows created yesterday and today. Another layer maybe down, a lot of tails down here at around 58. That could very well be significant as well. But got to point out, we got earnings coming here after close on the market February 12th. So you got about a 2-week window to keep an eye on this one, everybody. Let's see. I had a headline there for you. I was looking for Boeing, everybody, because I know that we've seen Boeing, but I think it was yesterday's headlines, if I'm not mistaken, on Boeing there. Let me just take a quick peek. I'm going to pull up the chart, because Boeing had been fixing itself, so to speak, right? We'd had a really nice move off of that 137 low. But I think the thing that has happened most recently, of course, was the test and the subsequent move that has occurred since. Look at this, everybody. You've got Boeing having broken out of a channel, like a 15-point channel of late. And if it is a 15-point channel added to 180, maybe 195 becomes a target. And you know what? What's interesting to me is look at where that is. I'm going to draw that line over here, everybody. 195-ish happens to coincide with some prior resistance. So, you know how we say about technical analysis, history doesn't rhyme, but it doesn't repeat, but it can rhyme. This is that kind of rhyming action, right? You've got an improving chart. You have a range breakout. The range is about 15 points. The height of that range added to the breakout would give you about 195, which happens to coincide kind of closely with prior highs. It can give you something for consideration. I'll tell you what, that is an improving chart. I was looking for my headline on this, everybody, but I apologize that I don't have what I was hopeful for, which was a little bit of something specific that I could speak to on this. So I apologize that I don't have more than just the what appears to be a nice little breakout move on that chart. But you know what? Let's quickly just point out, where would you be looking if you were talking about it today? Where would you be looking for exit strategy? Well, it might be below today's low, because getting thrown back into the range would kind of dispense the enthusiasm of today's move. And then last thing, everybody, I've got this trade on Carvana, CVNA. It's working in our favor. This was a risk-reward bracketed trade that we had put on previously. And the goal was just to let the trade go, right? Let it go down to my stop at 175 or up to my limit at 260. But we've got profit. And while we've got profit and we could stay with my stop order down here at 175, do we have to give up any of the profit we've taken? We have? Absolutely not. I may not be ready to take profit yet, but I want to raise my stop order in the hopes of mitigating my risk to the downside. So we're going to do just that, everybody. We're going to take my stop. We're going to push this up into this zone. So this would be right at the last low. We're going to go just a little beneath it to 228. So that's really like a 50-point adjustment on my order, everybody, in terms of exit strategy. Now, I'll remind you, when we make this change, remember, this order is a market order to sell once it becomes triggered. So we can't guarantee price. We could absolutely open below 228.67 and get execution below 228.67. It could get executed at any price. But by moving it higher, we are at least reducing the risk of being stopped out at a much lower rate. we're trying to capitalize on the move that we've had, and we still have the opportunity to exit at our limit up here. But hopefully, if it were to break down and we get stopped out, we'd be just capturing a smaller amount of profit than we would by selling today. But by having raised that stop, we have done a nice job versus where our original stop was. So wanted to make sure we made that adjustment here in the example portfolio on the example trade. So thanks for being here this morning, everybody. Thanks to my friend Barb there in the chat. Remember that we've got that survey opportunity. Would love to hear from you in the survey. Please take that moment. And don't forget to follow us on X, Barb Armstrong CS and Kevin Horner CS. Hit that thumbs up button for me down below, too, if you don't mind, everybody. I would appreciate any additional insights from all of you. But thank you so much for being here and joining the show. Look forward to seeing you all again real soon.